Hey guys, welcome back. Hope you had a good week. It's June 27th. It's Friday. We're going to review the 0-day options I took today on SPY and SPX. We have a small account challenge we're working on. Oftentimes, Fridays are low volume, are trappy, and just taking advantage of all the traders. But every now and then, you get a little something special. That's today. Let's review. So as I've been saying since like Wednesday or so, I might be squeezing. Tuesday, Wednesday might be squeezing. Squeezing on SPY is not like GameStop squeezing. It's very slow and mellow, but it's just squeezing shorts. Just keeps pushing and pushing, and there's not like any retracements. There's not exit. They don't give them a chance to exit basically. So that's what we've seen until today. Finally, people are finally taking profits on a Friday. That bounce. This is Eric at SPY Day Trading. Link for his Discord's in the description. So we had that gap up, broke us out of that magenta channel, and then it's just been buying. It's been very ugly buying though. Just that's what buying usually is. It's so slow and ugly on the indices. Today gapped, or no, yeah, that is today. That's insane today after what we've had. Just look at this. This is one day, and then look at this is one day. It's like this is so much better for trading. Yeah, gap up. We had PCE, I think, this morning, and more volume today. Definitely after afternoon, we had volume come in. So it's in the buying green channel, tapered out of that, and then drew the magenta. Eric drew the magenta to show bulls building liquidity, and then it broke out of that, and then he drew this selling green channel here, which broke out of also. And all of this action is just awesome for trading. So today you just kind of had to have patience. This morning there wasn't really an entry down here. Up here it was just building nice liquidity. I mean, this is just a great shoulder on a longer time frame. The best trades for day trades are when it's basically a swing trade, but you're doing it intraday. What I mean by that is the liquidity is built on a larger time frame in the day. So like right here, this is a huge shoulder, right? And not just looking at little heads and shoulders or little liquidity levels, but like a large amount. So this is what, an hour and a half of liquidity being built out of a 7-hour trading day. So then we had our head, and then we had our other shoulder that grabbed, ripped, and moved down aggressively. So this is ideal conditions for kind of day trading, because for one, the IV is coming down because this has been in such a tight range, and it's just very small price action. So your contracts are getting cheaper and cheaper as the day progresses because it's not been a big volatile day. So yeah, moves like this, this is where you get multiple thousand percenters when something comes out of nowhere. So you just have to show up, be ready, and recognize it. And risk management, 100% is the first key here. But yeah, I showed up late today. Yeah, 11 o'clock, I think I showed. Yeah, around 11 o'clock. So in the middle of this kind of liquidity being built, I didn't take any trades. It was just kind of waiting. I actually shared on Discord, on my Discord, not on Eric's. I'm going to be looking for SPX or SPY puts for next Wednesday. And quickly, I'll share the reason for that. If you've been watching, I talked about the upper Bollinger and how we've been kind of in it, and how there's liquidity being built at the upper Bollinger, which is typical for a squeeze. And now, if you look on my Webull chart, this is daily candles. We hit upper Bollinger, let's see, that was like 3 days ago on the 24th. Hit upper Bollinger on Tuesday, and it didn't reverse. Started building liquidity up here, and then just squeezed up. It didn't even come down, retrace to grab it. It just kind of literally squeezed the shorts where they're all shorting, and it's just like going against them. And that's retail. Everyone's like, oh, it's upper Bollinger, it's all-time high, which hit yesterday or 2 days ago. Let's short it. And that just makes it go up. So that's what's happening. It's going up and up and up. And then today I'm thinking, okay, it's well above the upper Bollinger. I'm going to start open up some puts, swing puts, because I don't know when it's going to happen, but I'm assuming the next 3 or 4 trading days, we are going to get a retracement back to the 5-day moving average, which is this purple one I just highlighted or just turned on. Because even if it wants to trend up aggressively, it's going to retrace back to some sort of support, which on a shorter time frame, even the daily, is 5-day moving average. So here you have a gap up to the upper Bollinger, and it did squeeze and kind of stayed above it for what, 4 days, but it was fully above it. I would say today was like this day, so maybe 2 more days above it before we have some kind of pullback. So that was my thinking in opening up puts, kind of swing puts. It's a bit of a lotto because my stop, like, I don't necessarily have a stop on them. I knew I wanted to hold them till next week, unless if we had enough of a reversal today, basically where we hit the 5-day moving average, that I would close them. So if we didn't do that today, then I'm still holding till next week regardless. So that's what I was thinking about is actually SPX puts. I say puts, it's actually one. They're expensive. You get more than a day on them, and like, these things are spendy. So that was on the big account. Opened up Wednesday SPX puts, and just today they were up 100%, which is crazy for 4 days, basically 3.5 days. So it was really just a Bollinger play, and thinking it probably wants to retrace back to the 5-day within the next 3 trading days if it wants to keep going up. And if it doesn't want to keep going up, then it'll flush through the 5-day and just dump. But I'm not expecting that or anything. I'm just expecting that it's well above the upper Bollinger, and however many standard deviations that is above it, that's what the Bollinger is showing you. It doesn't like being up there. It's overextended. So that was why I was doing swing puts on SPY, which I don't typically do, or haven't in recent history. And I open them, so you still want to look at the daily price action, figure out when to open stuff, even for swings. I mean, might as well get the best entry. My entry wasn't the greatest. I was kind of trying to top tick it, I was sharing it on the Discord, look at me, I'm top ticking. I didn't quite top tick it. The safer way would have been to wait for this head to grab this shoulder. And I talked about it in Discord that I'm looking for it around here, around 11 o'clock. I'm like, I'm going to look for puts on SPY for Wednesday. And then it started grinding up, which is exactly what I wanted to get them. And I got them at 11:43, I think, like on one of these candles. So top of this orange, and that's basically where I'm at. So there's not a stop necessarily on these. If it was a day trade and I was opening up here, yeah, a little more sketchy. But since I've got 3 or 4 days on it, I'm fine with it. Grinds up. I think the biggest I was down on it was like 5%. And if I open this on a daily, it would be down 60-70% by the time it hit here. So that's the difference with that trade. It's much more easy for me to manage, and I'm not hardly managing it. Like I said, it's kind of a lotto because I don't even know where I'd stop out of this thing. It's kind of a lotto, kind of a hedge on the whole portfolio. And so yeah, I didn't even look at it when it was down here, but we were well over 100% down here. That's kind of the swing trade. I told you guys I'd give you an explanation for that for today, and that was the explanation. I thought about adding to it once we actually broke this gold, which is what I was looking for, but I didn't. I don't need to get bigger on it. But if I had more than one, I only had one SPX. If I had more than one, I definitely would have closed one at low of day today, and then I'd close the whole position if we actually hit 5-day, which is down here, but we didn't. So since I only have one, I'm still holding it. I didn't close it down there, and who knows? On Monday, it might be back to break even, which is fine. I'm looking for a 5-day retest to close it, which we'll see. So on intraday, on the daily stuff, yeah, I held through all this. I did some stuff on the big account. I did a few trades, a little bit of over trading potentially. Oh, and in the morning before, I'm not trading futures right now just because the way the account's set up. So I've been practicing kind of pre-market squeezers a little bit, following actually Ross Cameron's criteria, but not necessarily his anything else, just his criteria on float, volume, price, catalyst, percentage. I think that's the 5. Yeah. And so yeah, that's what I had this morning. Couple of those. It's very easy to practice with a very small amount. There's no motion involved. Just figure it out. You can do it with paper, which is the best, but move it to money and just keep it super small. So since I'm not trading futures in the morning, and there's not always a good future trade anyways, extended hours, I decided to start looking at kind of these pre-market squeezers and see if I could get something in there. So those usually end about 9. But once the market opens, I'm not too interested in them, honestly. But today on the big account, yeah, where did I start even? So I fixed this a little bit so you can actually see what's going on. 1138. 1138. Very, very confusing. I'm just gonna look at the chart. I kind of remember where I traded. So I mean, you can see where the trades are. You've got this inverse head and shoulders right here, which is nice. You have a shoulder, head, inverse head, and it broke this red channel, magenta channel, nicely. I did have it charted maybe sooner. I'm not sure where I got that from. I kind of was trying to delete them as I was going, just so that it looked cleaner end of day for you guys, but it's kind of annoying because when I have a lot of them, then you can see, okay, I was copying and pasting them as we were going, and that's why I did what I did. But as you can see right here, with this magenta as a resistance and liquidity right there, and this is a bull flag. You have this head and it broke it, and it's grabbing the shoulder. I mean, simple enough. And then up here, I mean, it's kind of like I was waiting for inverse cups to complete for me to even consider looking at puts, and we did have one right here, and you have a little handle, and you had another one right here on this resistance, and then your handle, and then this larger gold resistance, which lines up with this one. You have it breaking that and then kind of retesting it right here, and that's this move, which kind of makes another inverse cup. Not really, but kind of just squeezes in this liquidity right here and builds some more on the shoulder. And then the actual move here, the algos have it all set up. They have it before we know it, but this actual move was news on, I think, Trump news. Trump saying we're not in talks with China anymore about trade or something. So that's where this flush was. You can catch it maybe, but you're going to be late. Your slippage is going to be insane if you're catching it after you've heard it on the news, because that's at least a minute before everyone else that's big finance has gotten involved. But you can. I mean, on a move like this, you can. Volume picked up a bunch. I did not catch this. The day I was expecting a normal Friday, low volume, just ugly chop. So I was waiting for cups to close. This was kind of a cup, but I was whatever. This one was one I was more concerned with, and then of course the big one from opening. And I was looking for cups closing because of the chop and yeah, Friday and all those reasons. But it flushed through this cup, which is fine. Started building liquidity, so I'm looking where to draw here. I started by drawing here, and then it kind of chopped and went lower, so I started drawing there. And this is another trade right here, breaking below this gold. It's not a very nice head and shoulders, but it is, and it did break this, and that's where you can see the volume picks up, and that big red candle once it breaks there. So that's it, completing the full inverse cup for the day. And then same thing right here. So what I've learned is handles can be huge or they can be tiny. And today's handle on the entire day, this is low of day, there's the cup. Today's handle was quite small. And that means there's enough liquidity for it to keep dropping, basically. Some days there's not enough liquidity, and it has to grind up here for hours and hours and hours, all the way up to maybe here. And that's the handle. And then it's end of day, and you don't have anything. And that handle, that inverse cup and handle, will complete after hours or tomorrow or, later. But today we had a tiny little handle, and once it broke here, that's where I took my puts. Yeah, basically a low a day, which is like crazy. But as you learn this system and learn how the market's working, you can take them on ridiculous entries. So on the, I'm not gonna look at the big account. Sorry, it's Friday. It's my son's birthday. On the little account, on the small account, I did a trade today. It's green, thankfully. Of course, if I just held uncontrollably, it would have been like 3x the account, but I'm just trying to practice and train to be better. I'm not trying to make money, honestly. Like, if I don't make money and I blow it up, I'll just do it again. So I'm in that phase for the strategy. So there it is, about 2 at 228, sold one at 230, sold one at 231. Almost 100%. Like 80 maybe on that second one. If I held it longer, I think it maybe hit 150. So 228. Yeah, that's right here. So again, we completed the inverse cup. I had already taken trades on the big account through here. Let's see, did I catch that one? I actually had some trades, but well, I don't know. I'm not going to view it. Whatever. On the small account, I don't want to trade any of this stuff for the most part. Like, gotta be careful because one stop and I'm out. So 228. Yeah, right there, right there. So right on that candle as it broke gold. I'm like, man, I gotta go for it, and it helped because I had this other lighter gold for the precision selling, the steepest selling channel there. So opened it there, and let's see, 230. I closed one somewhere on this candle. My profit target is, and take profits, was the gap fill. That was one of them. So 230 was this just big candle. Hadn't quite filled the gap, I don't think, on that candle, or at least where I took that first profit. 231 was this green candle, and it was a green candle. I'm like, I'm out. It just filled the gap. I'm done. So it did, of course, come down further. No big deal. If I had 3, I would have had 1 more to maybe hold through this. Yeah. But yeah, that was it for me on the small account, and happy to be positive. And then had a big retrace. So once the range widens out, once volume comes in, it's just so much easier to trade. Like, trading low volume is just sketch for SPY. Nice retrace, not all the way to our low of day, but this was, I think, yesterday's high or yesterday's low. I can't remember, but that's what this line is. I think it's yesterday's high. Came down. Unfortunately, on the big account, I sized up right here for this drop. Trying to think it's gonna do the same thing again. It didn't, so that loss was kind of ugly. Because really what I was going for is the 5-day. I was thinking it's gonna hit the 5-day by now. Maybe I got biased too much involved. It filled the gap. It did everything it needed to do, and yeah. So got bad slippage, and then I ended up getting out, I think, on one of these candles. Once it broke this gold, I think I got out. And then it started grinding up, but this was also on the resistance of Emperor's chart. Bada bing, did he change it? He did, it's been moved around. There was a line right here, I think it was by the blue, that was right here. So it was fighting up that resistance. I had puts there. I had calls there, and it was climbing up on the resistance. So I'm like, that support flipped into resistance, and it sketched me out. I'm like, this is probably just fighting that resistance and then gonna flush, because this head and shoulders was happening too fast and I needed more liquidity. And so I closed out 1 or 2 here. Let me show you guys here really quick. I think it's one of his last trades. This is the one, the big account I do want to show. 5. No, sorry, it's at the bottom. All right. 257. These are puts. Yeah, that was a red trade. 57 to, okay, yeah, that's where I did try to go short. 57 to 57. Yeah, that's that one right there. So I got in about there, and then yeah, that was a bad red trade down there that I scaled up for, I think. Yeah. And then so 301, this is what I'm talking about, where I got calls. This is a retracement trade, back to VWAP trade, and lack of continuation trade. So there's not necessarily going to be good structure. Sometimes there is. 301. So I started selling it because of that resistance, like I was telling you. Bought it at $5, sold the first one at 570 at 301 also. Sold another one at 490 for a tiny loss at 301. So once I looked on Emperor's chart and I saw that it was resistance, and it kind of have it on my white line here. So that was here, yeah, here and here. I was like, oh man, if this doesn't break out of that resistance, this could easily just be liquidity being built to go down. So I sold 2 of them right there, and then I had 1. That one contract. It's not good to look at, but I just want to show you for data's sake what end of day stuff does on white large moves when the IV is not crazy. This was 611. We ended up closing at 614, almost 615. So that contract, that last one I held because it finally broke through that resistance, and so I held it. And so 301, I closed both of them by 301, and 308, I closed the last one at 740. So it was $5 to 740, which is a great trade. 308. Yeah, I think it was on. And at this point, we're just in a big wedge, basically into close. So I'm like, at any point, I can come down and retest it. I'm just going to give back these, this small profit, but profit. I guess it was on the first red candle. I'm not sure what my thinking was. Well, I was trying to get off the computer actually also, which you can't get lazy, you can't get complacent. I knew it was going to be good. Once the volume picked up in here, I'm like, all right, this might be a good Friday. And that's when I started kind of focusing. And I did make some good trades in here, especially with even the small account, because that was a full-on chase. But the retracement, like, I don't know if it's going to retrace all the way back to VWAP, which it went way past VWAP, which is this purple, or if it's just going to wedge down here and just totally kill premiums. But it actually went way above VWAP. So at any rate, that was my last contract. I sold it right there. Yeah, sold it for 730. That one went to 3130. So dang. Yeah, 700 or $3,000. It's like, and that's kind of what the end of the day, like, you got to just, if it's a lotto, it's a lotto. I guess to me, my lesson is just, when it's a good setup in the market, don't get complacent. Don't get lazy. It's like you're clicking buttons on a computer. It's the easiest thing in the world. You can't ever be lazy with that. Focus when it's time to focus. When it's not time to focus, don't focus. Relax, get off of it. Don't overtrade on bad days. Thanks, guys. Have a good weekend. Sub up, like up, comment down. Happy money sticks around. Peace out.